Jose Vizquerra, President and CEO for OIII Mining, and multi-million gold ounce company with projects in development. And we are right now at the Gold Summit, Beaver Creek, Vail, Colorado.
Good to see you, Jose. Thanks for joining us from sunny Beaver Creek. We thought we'd try and catch up with you before you get into all of those meetings you've got lined up for the next 3 days. Pre-feasibility study for Marban has come out. Do you want to give us the headline numbers?
Yes, we're extremely excited. We have over $463 million net present value at a 5% discount rate with an unlevered IRR of 23%. If we use levered IRR, that goes over 40%, which is fantastic.
Right, exactly. Okay, so you, payback in 3.5 years, not too bad. ASIC under 900. However, the market doesn't seem. It is fantastic.
ASIC under 900, it's fantastic. Let's not underpin it. It's fantastic.
And over 160,000 ounces a year annual average annual gold production. That puts you up into a kind of mid-tier bracket of producers. You know, when you get that, like obviously remind ourselves it's a pre-feasibility study, but the numbers look good. However, you haven't seen that reaction in the marketplace. What's going on?
It's just a sentiment on gold. This is peg to gold. When gold is running, people are caring. We were only at $1.60 4 weeks ago when people care about gold. People don't care about gold, things comes down. As soon as the markets start to pick up, and remember, this is cyclical, we cannot be distracted by the share price. We have to be focusing on what we can execute and where we can execute. And that's what we do.
Okay, but do you what are people concerned about here? Because you know it's $100 company now, and you've got a capex. I'm staring at it, $435 million, and how do you begin to finance that project?
Well, financing, there is different alternatives, but I mean, assuming that we can work together with other producers in the area, for example, Canadian Malartic, that will bring down our capex from where we are on $435 million to the order of, let's say, worst case scenario, $200 million. If that is the case, $100 million is financing debt and the other $100 million is being equity from where we have $80 million in the bank. Assuming that some of our equities goes up, then probably we don't have to finance anything. We don't have to go and look for any equity. So I think the market is missing this optionality in the project that makes the project to levels of over 60% IRR if we can work together with our company.
Right, but what do you mean by that? When you say work with, why does it suddenly go from 435 to 200 million? Are you talking about tolling?
Yeah, you take the ore from one side to the other without having to build a tailing facility, without having to build a plant, without having to build a bunch of infrastructure that it's in place. And that gives us the opportunity to reduce in capex and to maximize value for shareholders. So what is a very worst case scenario here, Matthew? Really is that someone comes and take us over right now at these prices. At 30%, which is what has been the median. That's a very worst case scenario. The second worst case scenario is that we have to build our plant. And we're going to be making $400 million, which is essentially 4 times from where we are right now. In fact, if we take out the cash, it's like more. And the best scenario is that we work collaboratively with other producers. And we are certainly looking for different alternatives.
Right, and you've also got the rest of your portfolio here. So you've got to work out what are you going to do with your cash. As you say, you could stick with Marban and work this thing through the phases. You're going to burn through some cash during that period. One would expect to in terms of the economic studies and so forth. But it is a good cash producer for you. Is that a reality, or do you have to bring along the other children with you?
No, but that's mostly finance. Remember, we just did a financing only 4 weeks ago. So we incorporated $18 million thinking on the feasibility. So all that drilling, it's already embedded in the company. So right now, essentially, investors are buying cash with the option to have a project that is worth between $400 and $600 million.
That's kind of crazy when you put it like that. They're buying cash with the option of a mining company on the side. Okay, so we've been focused on Marban, and clearly that's the one that the PFS has come out on, and I appreciate you've raised the 18.7 million recently, but you've got all of these other projects going on which have some value attached to them, so or perhaps not. I mean, how do you view it?
So first of all, how do we add immediate value? And those are with finding ounces close to Marban that will be adding into the 10-year mine life that we have right now. Year 12, year 14, year 16. So we have to focus in increments of 2 years. And what we're doing right now is trying to build more resources around that. And we are in the verge. Like, that's going to happen. Next year, we're going to put out a new resource where we're going to be adding more ounces. And every 160,000 ounces that it's added adds $50 million in the net present value. So you make your math. If we end up finding another million ounces, this project is pretty much double.
Right. Okay. So you're starting to get a sense of what it is that you've got there, and again, it's a PFS, right? So it's early stages. You're starting to get a sense of
No. It's not. No, it's not early stage. That's not the case, because with a pre-feasibility, you have everything in measure and indicated.
I understand, but yeah, that's what I'm trying to get to. It's like, how do you choose how to play this? How do you choose to accelerate this through the economic study phases to a point where you're ready to make an investment decision? How do you, or do you look for a strategic? Because this is significant. Today's number is 160,000 ounces. That's meaningful. You can add another million ounces and double it. You can do lots of things to make it very attractive to a mid-tier, which could bring in a lot of capital to your business to then maybe move the other projects on. Because there's a kind of portfolio approach you've got in a way where you've got meaningfully advanced projects, but at the same time, you're navigating these choppy waters of the precious metals market at the moment. So and I imagine you're constantly reassessing. So how are you reassessing this?
Well, I think, first of all, we are going to move to a feasibility study with the money that we have. From the feasibility, we go into all the permitting process, and in that moment, with the feasibility, the idea is to have the financing ready. So where the financing could come: debt and equity. Worst case scenario, a dilution of $200 million in equity. Best scenario, having to use a facility from another company. And second best scenario, we just team up with a private equity. I mean, this project will be built regardless.
Is that a realistic option for you here? Because if I'm a private equity firm, I'm looking at this thing, and I believe the numbers that you're talking to me about. I would want to come and take you out tomorrow, because there's a lot of money to be made. But you've got you've got a responsibility to your shareholders. You are a big shareholder, and you've got to play this the public market way. So I'm just kind of
no, but you're not going to sell it. You're not going to sell it to the private equity. You're going to work together to build it, right?
Right. Okay.
So there is a middle ground where the private equity may take 50% of the project, and then the rest is financed. There is another option where the market sentiment changes by January next year, and then we go back to $3, and then the dilution is minimal, and you're financed. And as you continue to bring this project forward, it will urge the other competitors to do something, because one thing we know, and everyone knows, and they have even been public saying that, and it's Canadian Malartic run out of ore by 2027 for the mill that they have. And it's one single mill. They have one single line where they work. So once they turn on the energy, it is the same to process 20,000 tons than to process 60,000 tons. So that means that if you're going to be processing, worst case scenario, 30,000 tons, you're going to be losing energy for 30,000 tons. You're going to leave it there? I don't think so. That means like $50 or $60 million a year. I'd rather process the ore from someone else. And I'm going to be ready by 2026.
Right. So the timing kind of works there, but again, it's a case of your best.
And not only that, you may have the question and tell me, okay, but they can process someone else, or I am the only one with a pre-feasibility right now. No one else has a pre-feasibility. No one else will have a feasibility next year, and no one will have the permits by 2026.
Right. So is it a gentleman's agreement? Is that the best thing, or do you make yourself defensible, or do they come and take you out, as you say, a 30% premium? I mean, how do these decisions get made?
That.
Yeah. Right. Okay. Exactly.
Well, that will be a decision made by Franklin Templeton, by Merck, and by Osisko, deciding if they want to sell or not, and my family. And I think the answer at these prices will be no.
Yeah, no, I know, I understand the complexity of that, and I didn't realize the
If
timing fitted so well.
our story is a story that if someone wants to make money in 2 months and make 50%, that's not going to happen. But it's a story that if you put your money right now and you're willing to wait for a year or maybe 3 years, you might be making between 50 and 200%.
Right. So if you look at your peers, if you look at peers more broadly, they're being valued at what? I mean, proper peers, not people you want to be like, but people in your position with what the PFS is telling the market. What should a company like that be valued at?
But right now, companies are being valued at half their net present value, or even less. In our cases, we are at 25%, like 0.25. So I think we have a fair amount of re-rate to happen there.
Right, that's you guys, and I know it's a difficult one to answer, but you would advise people to look at which companies to be able to do their own diligence.
Well, I really tend to focus on what we do, not what other people does. We are in a very particular jurisdiction. We're the only one in the main Val-d'Or, 12 kilometers from two major mines. So I think it would be unfair to compare others to where we are in our position.
Okay, and so tell me this: we saw Marathon recently put out, obviously nowhere near you, but put out a new economic study. Their costs went through the roof. They were like 40% over the previous economic study. The market reacted quite badly to that. Do you see this inflationary environment continuing? Or are you starting to see signs that it is slightly reducing or sort of subsiding in somewhat?
That's a very difficult question to answer. I think it has gone up quite a bit. It may continue to go up. In our cases, it was mitigated by better recoveries. So that was a nice change that we saw by doing the proper work. And listen, if inflation keeps going up and creates distress and creates instability, then maybe by first quarter next year, gold will be ripping. And if we are only thinking about inflation and only thinking about what the central bank in the United States can do, there is no doubt at this moment that that could happen.
Right. Okay. I guess you've done the work to mitigate any kind of cost increases from the PA through to now. That's in your control. The markets are not. What's next for you guys? What do you do now?
Feasibility and get the permits and decision to build it, either by ourselves, together with a private equity, or in conjunction with another major company. I know it sounds super cocky, but it is what it is, and we're in a very good position. This is a project that is solid like a rock, and this is a fantastic opportunity for investors to come in. You know, if you're going to buy and you don't want to lose, this is a time where you should buy. Simple as that.
Okay. Jose, look, I know it's getting late there. Your meetings to be had, and also this has been quite a dodgy line that we've been speaking from. So hopefully you have a great rest of the conference there. Good luck with your meetings, and let us know how you get on. Okay.
Thank you very much for your time, Matt.
Cheers.